In today's trading session, the market was extremely volatile. We've seen a roller coaster of a ride where the S&P 500 scored a nice opportunity to play the upside and the downside after opening lower. So in today's lesson, we're going to be talking about how to trade the volatility with SPX options. Now, SPX is a great way for traders to make money fast, efficiently, and take advantage of the opportunities and volatility that exists in the market space. The great thing about SPX, I use it as a means of using profits to forward into my potential swing trades. We've seen so many opportunities to play either up or down. Now, today's trading session, it was not my personal best, where we scored 3 nice SPX trades but missed on 2 opportunities. I must admit I was a little distracted today due to personal reasons, but that's okay because I'm here to be transparent with you guys. Overall, the day was a nice green day, and I'm gonna go step by step with you guys, explaining where we had purchased these contracts, where we had sold them, and also go over a little bit of lesson about premiums along the way. So if you guys are SPX traders or want to learn more about it, this lesson is one you do not want to miss out, and you want to watch the full one. So let's go straight into it and let's discuss about what happened here. So this here is exactly where we had prepped. So starting our day off, we basically mentioned here in our prediction that the edge is going to be going to the downside and we're likely to see 65.80. This is when S&P 500 was around 66.10, and we also pretty much confirmed that there would be a huge support eventually. So based on this range and analysis, we pretty much got an idea about what we're dealing with. Now, the reason why we mentioned 65.80 here is because if you guys watched our last video here, 65.80 was our estimated weekly low on the S&P 500. So going back into our main map, we pretty much called the top at our level 1 bullish here. That's where around SPX went to, and then all of a sudden it started to move lower as time went by. So going back into the chart over here, we can see directly where the detail goes. So let's go over the trades that we have taken and let's discuss how we managed to play. Where do we buy and where do we sell is going to be crucial to understanding how one can trade SPX. So starting off our day here, we basically right over here. Let's go over right over here. Okay, so we start our day selling our GS puts over here that we had a swing, but we're focusing on SPX today. So I'm going to do a replay for you guys right here. Okay, so the S&P 500 opened lower right away, right? So here, this is where we got a little bit intrigued by the downside. And the reason for this is because this was where our level 1 bearish support here is. Okay, looking at this situation here, usually I buy calls right at the open, but I also know that 65.80 is exactly where our estimated weekly low is, and that is another key support. So we decided to wait at that particular moment. Okay, so if you guys look at our details over here, going back to the map, right, estimated weekly low was at 65.80. That's where the key support was, and underneath that was a bearish breakdown. So once we identified that as a key support, instead of buying calls at level 1 bullish, we decided to wait at that particular moment here, right? If you guys look at the MACD, you can see that the momentum is showing signs of weakness, and the market definitely was gonna likely slice through. So that's why we didn't purchase that immediately. So starting into the day here, we see here that the SPX, this is where we had decided to buy the 66.30 call here, okay? So the 66.30 call was purchased at around 1.8. Now, when you decide to play a reversal play, there's a couple of things that really matter when it comes to picking the reversal play. First off, you have to really make sure that the strike that you select is going to be one that's potentially going to make you money. In this market here, the premiums were very expensive. I mean, the 66.30 call was at 1.8. This was a trade where it was 50 points up. Okay, so being 50 points up and paying almost $2 for is quite expensive. But that is a tell for what's to come. So the reason why we selected that strike is because that was the bottom of our neutral zone. So if the market really wanted to gap, it would potentially go to 66.30, which was given in our war room right over here as the neutral zone. So if the market ever recovered back to no man's land where the deltas would be neutral, most likely would be here. So between 66.30 and 66.40 were the ones that were going to work. Going into the premium side here, right? So now we're talking about premiums. One thing I always look at is, of course, the deltas, right? So we have the deltas pretty much over here at this little particular side here, okay? If the delta is under 0.2 here, that tells you that it's a very, very high risk play. So you need something that has a good delta in order to make money off of that. So that's what we were watching as well. So we decided to select that call here, and going back into our trade call outs. So the moment we got into this, right, everyone got a chance to get at the same price I did. This green little candle right over here gave us a fast 40% winner there, okay? I wasn't able to sell it right away. I was actually planning to do that, but I didn't get a chance to do that, right? So this here managed to really spike up, and this was actually puts, right? So we were trying to buy SPX 6580 puts at 1.8, and what had happened here is that the market ended up moving here. So what had happened is that at this point over here, when we got that little rip, we decided to sell at around 6,600, right? So we had a decent large position. I was well aware that the market could have gone slightly higher, but I was really happy with making the first almost double right off the bat here. Okay, so that was one thing here. And while we sold these calls, we were waiting for this to fill as well, which is at around 1.8. The next thing that we did here is we bought the 6570 puts. Now that wasn't the best entry point here. It wasn't pre-announced. So the 6570 put was purchased around over here at close to 11 o'clock, right? So that's when we started to see weakness here. And what had happened here is that the market started to pop off the WAP here. So going into the WAP, surprisingly you don't see it here, but this here was where the WAP is, okay? So when the WAP came, the market seen an instant rejection right off that zone here, and we decided to add more puts, okay? Because at this point, this is where their upper WAP was. So if we delete this here, we can potentially see, there we go. So right over here is where we decided to get additional puts to average down. Once that average down had occurred, right, we took profits at around 30%, and we got out at around this zone over here as well, okay? We knew that the SPX could go back over here, but because we had averaged down on this position, doubled up, it was important to do that. And that was a good thing because the market actually started to pop right off that particular zone. So going back into that particular replay here, we can see that pop is where things started to really break down here. So it hit the pop, and then it started to coast here for a little bit, okay? The next trade that we started to do is that we wanted to play potentially a core PCE swing here. So we had taken the calls, sorry, for at this point here, this is where it was sold. So we took the calls over here thinking it would break out. We then averaged over here at this particular point, and this play didn't end up working out, right? Because we got a retest at my estimated weekly low. This is where I decided to sell the 6570 calls for tomorrow. So the good news here is that the 6570 calls didn't lose a lot of premium because we added a day and it had the core PCE IV involved. So we sold it there, and we decided to transition because looking at the premiums here, so at this point over here, as I mentioned, we added more at the wrong time, and then we sold those calls at around minus 46%, almost 50%. Then we decided to take the puts at this particular point. Okay, why did I take the 65.50 puts at this particular time frame? It's because when I was looking at the 65.50 puts, which was a little bit far, I was looking at the low and the high of the day premium on those, right? So I can't see that data here, unfortunately, but the 65.50 puts, basically, it had a high, I think, at the time at around $3, and it was half a price, right? As soon as that little bounce happened here, right? So we decided that was a good opportunity to take advantage of that, and literally from this point on, when we had sold our calls and transitioned to put, we made an instant double here. Okay, so that was a nice double here, another winner on the SPX. We first took 80% on the upside, 30% on the puts, and then we had sold more puts at this particular point. So those are the three solid trades. At this point, I got a little bit more FOMO, and I decided to buy the 65.50 put, which went to shit here. Okay, so there was two bad trades on SPX, but overall we ended up green because we sold the calls for tomorrow at a partial loss, and then we scaled this one a little bit lower here. So even though we managed to do very well on SPX, the execution could have been a lot better, but this is how I pretty much do it here. As you guys can notice here, I have a setup where I can see my chart and my option premiums aligned. This is a wide screen that I'm using here, and it's very helpful to do that if you want to learn how premiums, because if you can watch the candlesticks and watch how the stocks is moving in relation to the option premium, then you will definitely do a lot better moving forward. So I hope you guys enjoyed this educational tutorial on how to read option premiums and trading SPX 0 OTDs. These plays, you know, we look at it, we had multiple 3 plays that generated in excess of 100% returns, and that gives us fast money. Doesn't really hold our capital. Like, our capital is not tied up in plays that we're waiting for to cook. We make that money instantaneously. You can definitely size lower if you wish, but SPX, when these time and opportunities comes, you want to use your tools such as your WAPs, your levels, and all that to make the best use of your capital and not have it tied in any sort of swing or anything like that. So I use these SPX plays to get my daily bread, and I use the profits to swing them so that way we can generate the feast. Okay, so that's what we do in StockX mentorship program. We try to make sure that we play both swings and SPX and try to make a profits with consistency. Our A+ setups are pre-announced. There was one particular trade that I wanted to take for the $500 account challenge, right? And we decided to cancel that 1.8 that I initially mentioned. If that had failed and we left it as it is, then it would have definitely paid well. But overall we canceled because this was actually very close to filling. It was literally 10 cents away. If we had filled this play here, then we would have made a lot of money, right? So sometimes those A+ setups don't always fill, and you could be off by a little bit of a hair, and the market just sometimes moves, because when we do these A+ setups, we basically find the best demand zone. That entry point was actually at this point over here, right? It was just off literally by 10 cents. Off by 10 cents, and it started to really skyrocket lower. So that, the $500 account challenge, we left that as it is. Currently, the account is sitting at a double at this time. So thanks for tuning in. I hope you guys enjoy this lesson. I'll see you guys in the next one. And like always, let's get that money.